Money Roots is made possible by the support of our sponsor, Rooted Planning Group. Are you ready to take control of your financial future? Look no further than Rooted Planning Group, your trusted partner in financial well-being. At www.rootedpg.com, you'll discover a wealth of resources and expertise to help you thrive financially. Rooted Planning Group specializes in personalized financial planning, investment management, and retirement strategies. They understand that every financial journey is unique, and they're here to guide you every step of the way. With a team of experienced advisors, Rooted Planning Group is committed to helping you cultivate a secure and prosperous future. Visit www.rootedpg.com today to learn more about how Rooted Planning Group can help you grow your money roots.
Welcome to Money Roots, the podcast where personal finance gets personal. Hosted by Amy Irvine, the CEO of Rooted Planning Group. Each week, Amy and her team dig deep into the world of finance, making it more approachable and understandable for everyone, no matter where you are on your financial journey. From savings and investments to budgeting and planning, Money Roots brings you practical advice, inspiring stories, and expert insights. They believe that everyone has the potential to grow a healthy financial future, and they're here to help you nurture it. So, whether you're a financial guru or just starting to plant the seeds of your financial knowledge, this is the place for you. Get ready to uncover the tools and strategies that can help you thrive financially. So, without further ado, let's dive into today's episode of Money Roots.
Hey, podcast listeners. Welcome to today's episode. This is Kerrie Beene, one of the certified financial planners and your chief investment officer here at Rooted Planning Group. Today, we're going to do something a little bit different. I'm going to read you an old fable, and then we're going to talk about what this has to do with our financial life. So the fable is one I'm sure you're very familiar with, but may not have heard the story in a while. So the fable is The Tortoise and the Hare. Once there was a strong young hare who bragged about how fast he could run. Tired of hearing him boast, the wise tortoise challenged the hare to a race. The hare agreed at once, thinking that he would beat the tortoise easily. All of the animals gathered at the finish line to watch the race. As soon as the race started, the hare dashed ahead. He ran down the road, but within minutes decided to pause for a rest. How do you expect to win this race when you are walking along at such a slow pace? He simply said to the tortoise. The hare stretched himself out next to a tree and fell asleep thinking, there is plenty of time to relax. That tortoise will never beat me. The tortoise walked slowly past the hare. He walked and walked. He persevered until he got to the end of the race. The animals cheered as they saw the tortoise reach the finish line. Tortoise, you are the winner, they shouted. The hare heard their cheering and woke with a start. He zoomed as fast as a rocket towards the finish line, but it was far too late. The tortoise had already crossed the line. It's not fair, complained the hare. I was asleep. We have to do the race again. But this time, no one listened to the hare. After that, the hare always reminded himself, don't show off about your speedy pace. Slow and steady won the race. So what does this have to do with money? And why are we telling the stories on the podcast? And what can we learn from a fable that is over 2,500 years old? I'll just go ahead and give you the answer, but then we'll talk about it. So the answer is that slow and steady won the race. So let's transition and think about investing. So investing can often feel like a race, with investors pursuing returns comparable to the hare's speedy sprint toward the finish line. In today's fast-paced world, instant gratification often takes precedence over long-term planning. However, as the fable teaches us, the tortoise's steady perseverance may be a more prudent strategy. So let's break down the key lessons from the fable and how they apply to investing. So we have 4 lessons that the tortoise and the hare want us to learn. Lesson 1 and 2 kind of go together. So I'll read the lessons and then we'll kind of talk about them. So lesson number 1 is consistency wins the race. Just as the tortoise consistently plods along the course, investors who consistently contribute to their portfolios or their retirement accounts or whatever their investment is, over time tends to achieve better long-term results than those who try to time the market or chase short-term gains. Lesson number 2, avoiding impulsive behavior. The hare's impulsive decision to take a nap during the race serves as a cautionary tale against impulsive investment decisions. Emotions such as fear, greed can lead investors to make rash choices that undermine long-term financial goals. Some kind of thinking through lessons 1 and 2. Again, lesson 1 being consistency when in the race, and lesson 2, avoiding impulse behavior. Some things that come to mind from the hare's perspective is thinking like chasing that hot stock, the sector or the asset class. And this can be very rewarding in the short term, especially if you get it right. But it's impossible to predict when the hot markets will suddenly fall out of favor. While the run-up can be exhilarating, the fall can be treacherous. Just as, the hare was very excited to be so far along the race that he felt he could take a nap, but then only to face devastation once he realized the tortoise had won the race. Another thought process kind of along the lines of lessons 1 and 2 is market timing is notoriously difficult. A lot of research suggests that consistently outperforming the market through timing alone is very rare. Another thought, kind of thinking about consistency and a long-term strategy, is that as investors, we should not pay attention to those daily market movements and the drama that the news throws at us. While it's important, especially in my role, these are things I'm paying attention to and will continue to. And it's, it is important day in and day out. The normal person don't need to focus on the market noise. You need to have more of a focus similar to the tortoise, just kind of making sure you're doing what you need to do, plodding along, even with the hare taunting us, with the hot stocks and we're doing this and I'm doing that. You have to tune that market noise out. So avoid those impulse behaviors and remember that consistency wins the race. Lesson number 3 is the power of compounding. So in this situation, we're talking about compounding interest. If it's not something you're familiar with, it's definitely something I encourage you to learn a little bit more about. Like the tortoise's slow but steady progress, compounded growth can have a significant impact on investment returns over time. If compounding interest is, again, a foreign concept to you, I really encourage you. Just go online and look it up. It's very interesting. Even Einstein thought so. He said that compounding interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. So again, really learn about the compounding interest and how it can benefit you. So lesson number 4 is patience pays off. So at its core, the fable of the tortoise and the hare emphasizes the virtues of patience and discipline. So similarly to successful financial planning, it requires individuals to exercise patience in pursuing the goals and discipline and adhering to our saving and investing strategies. So as investors and as clients, you may be a client here at the firm. One of the things we continually talk about is just keeping a long-term mindset and thinking about pursuing our goals over time. And it does require some patience. And it can be frustrating in the short term. But, again, the lesson is that your patience pays off, and you definitely want to be the tortoise. Another fact is that historically, the stock market has delivered positive returns over the long term. There are periodic downturns and volatilities, and markets can be volatile year to year, such as the financial crisis of 2008, the tech bubble in the early 2000s, the COVID from 2020. But the fact is that the longer we're in the market and the length of time that you can stay patient and stay consistent, that will reduce the volatility in your portfolio. So embracing that long-term perspective, we as investors can benefit from the power of compounding, allowing our investments to grow steadily over time. So as we conclude today's episode, I really hope that the timeless wisdom of the tortoise and the hare, which is slow and steady wins the race, can give you some encouragement for that long-term mindset and strategy for your investments. So whether you're investing in the stock market or pursuing any other financial goal, that could be saving, for an emergency fund, saving for any other goal, and just your overall financial plan, the big key is that patience and perseverance are what you really need to be successful. And as the lesson from the tortoise and the hare teaches us, slow and steady wins the race.
You've been listening to Money Roots, your go-to podcast for making personal finance accessible and approachable. Thanks for joining us today. Amy and her team have enjoyed guiding you through the roots of your financial journey. Remember, whether you're planting new seeds of financial knowledge or nurturing the growth of your existing financial plans, Money Roots is here to support you every step of the way. Be sure to follow us on Facebook, Twitter, and LinkedIn, and visit our website at www.rootedpg.com/podcasts for more resources. And of course, subscribe to Money Roots wherever you get your podcasts so you never miss an episode. A big thank you to the sponsor, Rooted Planning Group, for making this show possible. At Rooted Planning Group, they're committed to helping you cultivate a thriving financial future. Until next time, keep growing your money roots.